Nirmal, ladies and gentlemen. I'm Hirol Datia. We have with us Mr. Akshay Pitti, Vice Chairman and MD at Pitti Engineering, joining in. Welcome to the show, Akshay, and a pleasure to speak to you and get insights from you. Akshay, my first question coming to you overall is, if you have to describe the last 18 to 24 months, how would you describe them, taking into consideration that we've seen a whole host of ups and downs, the transition from a downtick to an uptick that has come in? How would you describe it?
See, I think the last 18 to 24 months due to COVID were very disruptive in the beginning. And then, once the lockdown started, going into unlock mode, we started seeing huge demand coming in as a result of pent-up demand, as well as the capex-led, infrastructure-led demand coming from various end user segments of our business. And like you said, it's been really overwhelming, so to speak. We've 2x our revenues. We've posted our best results as a result of that additional demand coming in.
Right. So overall, if you have to talk about FY23 as a whole, what's the outlook that you have?
So the outlook continues to remain positive, Hiral, despite the challenges emanating from the Russia-Ukraine conflict, as well as the inflation concerns. We are still confident of posting better numbers than last year, and are optimistic about a 25 to 30% growth this year.
So we're saying FY22, we're looking at a 25 to 30% overall growth in terms of top line?
Yeah, top line, profits, operating numbers like our tonnages and machine utilizations, all of them.
Okay. And overall, if you see in terms of the raw material challenges, in terms of pricing that we're seeing, how big an impact is it? By how much of the prices have increased, and have you been able to pass them on, or has it been a hit on our margins to some extent?
So over the last 24 months, pretty much prices of all input materials have more than 2x. And luckily, we have a price variation clause with our clients wherein 100% of the increases are passed through to them. So we've been spared the brunt of those increases. Now we are already starting to see the prices decreasing. So we should see some reductions coming from that side as well.
Okay. So in terms of price reductions, will it be again, given out to the consumer, or are we going to absorb it on our margin?
No, they'll be passed through because of the contracts that we have.
Okay. And overall, if you see in terms of the various product lines that we have, what is that revenue contribution right now looking like?
So the biggest contributor for revenues is railway and traction motor related components. They contribute about 27% of the revenue. And they are followed closely behind by other segments such as special purpose motors, power generation, and industrial consumer motors.
Okay. And between these product lines going ahead as well, which segments, according to you, will be growth drivers for the company?
See, currently we are seeing growth coming from all end user segments, whether it's locomotive, metro, special purpose motors, mining, oil and gas. The only sector which I would say is not growing is consumer durables, mainly because of the inflation.
Okay. And are you expecting a turnaround soon?
In consumer durables, it is to be seen because, as you know, that these products are very price sensitive because they are to the end consumer and not to businesses. So we'll have to wait and see how that's going to play out.
Okay. And currently, if you go to see in terms of the current capacity, where does that stand?
The capacity is at 46,000 tons. It's being expanded to 72,000 tons by end of this year.
Okay, so we'll be expanding from 46 to 60,000, right?
72,000.
Sorry, from 46 to 72,000 is what we're looking at in terms of expansion. And what's the current capacity utilization?
So current capacity utilization is at 80%. And we see this going throughout this year at 80%.
Okay, so that's where, and this is even after we add the and increase it to 72%, we will still be in that 80% utilization range.
No, so 72,000 tons capacity would be operational only by the year end. So that would be capacity available for next year. For this year, in quantitative terms, our business plan is for 42,000 tons of sales. So vis-a-vis a capacity of 46,000. So as our capacity progressively increases, the utilization factor will fall down.
Got it. And overall, in terms of expansion plans, what is it that we are looking on apart from the capacity side of it?
So apart from the capacity, the key initiative that we have as a company is to offer more and more value-added products to our customers, and also offer the products which go along with our core product into their assemblies, thereby simplifying the supply chain as well as consolidating the vendor base. So, that results in a more agile supply chain for our customers as well as a cost out. So we are focusing a lot on investing in equipments which can enable us to do that going forward.
Okay. And in terms of geographical revenue breakup as well, currently, what does it look like? And how are we looking to expand on that front?
So exports currently stand at 1/3 of revenue. And going forward, we see that actually contracting a little bit because we see exponential growth in the domestic market. Exports will grow, but not in the same proportion as the domestic revenues.
Okay. So we are saying domestic will grow more than exports. And if that happens, what percentage of revenues then will come from exports versus domestic?
So we expect that exports will be down to 25% of current year revenues. So we see the top line increasing from about 970 odd crores to about 1400 crores, and 25% of that would be about exports.
Okay. And overall, if you see in terms of newer geographies as well, which ones are we looking to add?
So currently, we predominantly operate in Brazil, Mexico, and US, and we are looking to enter the European market, which is largely untapped by us. So we see good growth coming from there over the next 5 years.
Okay. Okay. And overall, if you see in terms of where the key milestones go, what is that going to look like if you have to look at the company from a 3 to 5 year perspective?
So key milestones, I think first would be obviously to implement this massive capex that is ongoing. Apart from that, the second key milestone I would say is adding the new and growing the new product segment of electric vehicles. That is something we are really excited about. We see that going forward, it can be a huge revenue driver for us. So we need to get the execution on that development and localization right. So those would be the two major key milestones. Apart from that, if you talk of 3 to 5 year kind of horizon, I think it would be strengthening the balance sheet further by reduction of debt.
Okay, and currently what's the debt to equity?
So currently debt to equity is about 1.2, and we would like to get it down to below 1 going forward.
And that will be a 3 to 5 month horizon.
3 to 5 year.
Sorry, 3 to 5 year horizon. I beg your pardon.
Yeah.
Right. All right. So these are the key things that we should be watching out for as well. Thank you, Akshay, so much for joining us on the show. Always a pleasure to speak to you. Thank you for the great insights. Congratulations once again, and good luck for the coming quarters.
Thank you for having me, Hiral, and it was a pleasure interacting. Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.